Welcome to Underwriting the Basics at Ignite Funding. I am Carrie Cook, the President of Ignite Funding. My roles and responsibilities are the oversight of all functions within the company, currently managing over $250 million in client capital, and I specialize in commercial lending and custodial services. With me today is Pat Vassar. Welcome, Pat.
Thanks, Gary. I have a master's degree in real estate and construction management. I've done about $670 million worth of real estate projects over both commercial and residential development and acquisitions.
Thank you, Pat. So let's start with, how do borrowers find us?
Well, typically we don't go out and seek or actively seek borrowers. Most often, borrowers come to us. We've been around for quite a few years now. That we have a fairly good reputation in the industry where most borrowers have either heard of us or know somebody that has worked with us in the past. So they'll come to us for financing. We have kind of a niche market we typically go after of companies that are a little too big for small local banks, but still too small for the national banks. So that's where we kind of fill our role, typically between $500,000 to $5 million size.
Is there a particular lending region in the country that you prefer over others?
We typically lend in the southwest part of the United States only because it's our backyard. We know it really well. We've become extremely good at evaluating projects in these particular areas. So we don't jump too far outside of our comfort zone. Primarily the Southwest is where we've done many projects in the past and will continue to do projects in the future.
How do you qualify the borrower and the initial asset for further consideration?
We use what we consider the 3 C's of lending. The first being the credit, capacity, and ultimately the collateral of the borrower. The first is the credit. What this typically means is the credit score. So we'll pull the credit score of every borrower we lend to. We will look to see if they have any foreclosures, bankruptcies, liens, or any judgments against them personally or as a company. The second thing we'll look at is the capacity of that particular borrower. What capacity is the debt ratios. How much money do they have in equity? How much money do they have in debt? If they take on more debt, will they be able to pay their bills? So looking at kind of the whole overall capital stack of that borrower. The third is the collateral, and it's definitely the most important piece in our eyes. The collateral would be looking at pretty much 4 main areas of a real estate project. The first being if it's legally permissible. What this entails is looking and working with the local municipalities to figure out if the zoning that the borrower wants to utilize for this particular project will be acceptable to the Planning Commission. If there is going to be any hard time with getting any sort of approvals that will increase the risk of the project, so we typically won't do it. The second thing we'll look at is if it's physically possible. Is it physically possible for the borrower to build what they want to on the site? So that'll be looking at the dimensions of the project. That'll be looking at the dimensions of the asset they want to build on it, as well as the way the land is currently configured. Third thing we'll look at is it financially feasible. We'll look to see how much money the project will generate to ensure the borrower will be making money. Because if the borrower is making money, there's no way they're going to walk away from it. They're going to continue to pay their bills, so they make their money at the end. The fourth thing is it maximally productive. What this entails is if they want to build a project that could be the highest and best use for that particular site. You don't want to build a trailer park in the middle of Times Square. The use for that particular piece of real estate can be much more productive or maximally productive by a different use.
Why is the diversification of a portfolio important for an investor, a borrower, and just in general when you're investing?
Well, the overall diversification of a portfolio is of the utmost importance. Anytime you're investing, whether you're a company or individual, you want to look to diversify your overall portfolio. Most of the time, as an individual, you've heard, keep your money in stocks and bonds. Well, the reason you're not all in stocks and not all in bonds is to diversify your portfolio. Obviously, there's a lot more to the investment realm than just stocks and bonds, one asset class being real estate. So within the real estate class, we look at diversification in three different ways as well, both looking at the equity side of real estate projects as well as the debt side. It's important to be on both sides of that spectrum because from a debt side, although it is more secure and less risky, the returns aren't quite as high as the equity side. The equity side is a little bit more speculative, a little bit more risky, and tends to generate higher returns. Another component of diversification would be the location diversification. What we want to look at here is lending in different areas throughout the U.S. As we talked about previously, we typically specialize in the Southwest because it's our backyard. That's where we know the best. We'll look for markets that have high drivers on a macro scale, like employment and desirability to live. The third thing we'll look at for diversification of a portfolio is who we're lending to. From an investor standpoint, you want to look at where your money's going. Is it all with one particular borrower, or is it over a few different borrowers or many different borrowers? All three types of ways we've talked about here are great ways to diversify your overall portfolio, whether you're a borrower, a investor, or a company in general.
Before we move into our underwriting philosophy and valuation methodology, let's make sure our listeners understand how you are compensated, as it may come as a surprise to some.
Great question, Carrie. Actually, I'm compensated once the loan pays off. This is done for a number of reasons, but primarily because when we look at a property, the worst case scenario is if we have to take it back. And we want to minimize that worst case scenario. And so when a loan pays off and 100% principal is returned to investors, that's when I get compensated.
Since the collateral is the most important aspect, we have coined a phrase here at Ignite Funding, loan to own. Let's describe what this means to an investor.
Loan to own is an approach we use to look at the worst case scenario of a project. From an investment standpoint, or in this particular investment standpoint, the worst case scenario is a foreclosure. If the borrower does not make their monthly interest payments, our recourse against them is to take their property back via foreclosure. So although this is the worst case scenario, every project we do here, we underwrite as though that worst case scenario was going to happen. So we look at the loan to own approach. Although we're just doing a loan, we will underwrite it as though we are going to own it. If we were to have to go through a foreclosure, is there enough equity in the project that we'd be able to sell it and return the collateral or return the equity dollars back to the investor?
So how do we make sure the collateral has this blanket of equity around it?
That is done through the loan to value. Loan to value is a simple mathematical equation taking the loan amount divided by the value of the property. The loan amount is pretty easy and straightforward, is the note rate of the investment. The value component is much more difficult to formalize. That can come through many different approaches. Here at Ignite Funding, we always use our own approach to value. It's typically, or 9 times out of 10, I would say, lower than what an appraiser would typically say the value is. Through this conservative approach, our loan-to-value ratios are right around 67% historically through the history of our company. So loan-to-value, this blanket of equity you talked about, is the most important piece because at the end of the day, if we were to own it, or this loan-to-own approach, we need to make sure that we have enough skin in the game from the borrower's perspective that if we were to take it back and sell it, we would recoup all the collateral of our investors.
When you're evaluating the market drivers, what type of statistical information are you looking for?
We look at macro drivers of the locations in which we're lending. We'll look at the current employment growth, as well as the long-term employment projections. We want to ensure that a major employer is not about to move out of the location. We want to make sure that citizens or people that live in that area can not only afford to live in that area, but also thrive in that particular area. We want to make sure that the supply and demand of housing, the supply and demand of employment, and the supply and demand of all factors are taken into account, that people will want to live there. One of those things we need to take into account is the affordability of the area or the desirability of the area. We want to make sure that people want to live there and are not just living there only because it's the only place they can get a job. Another thing that we'll look at is the population growth or the household formation. This is very important, especially when you're looking at residential lending, because at the end of the day, if there's more people moving into a local area than they have housing for, ultimately they're going to need to build more housing to keep pace. So those are the primary ways that we'll look at the macro analytics of a particular market.
Thank you for joining us as we reviewed the underwriting basics with Pat Vassar, our Director of Underwriting. If you're interested in learning more about the investments offered through Ignite Funding, please call us at 877-739-9094 or email us at info@ignitefunding.com or check out the available investments on our website. Thank you and have a great day.